Welcome, Patriot Radio News Hour. Joe and Jason on this Friday. You know what? How about Good News Friday? Yeah, Good News Friday today. Our toll-free number, 800-951-0592. The website at allamericangold.com. And I'm sure you all know, right? Gold, a new all-time record high. It's been above 3,000 to the ounce. Silver got up to $34 already today. A little bit of profit taking maybe here at the end. What a week it's been. Wouldn't be surprised. More good news. The Democrats are going to, they're going to get 8. We're going to get at least 8, and they're going to work it out. Chucky Schumer, he wasn't happy. You know, yesterday he said they weren't going to do it. Well, I guess Wednesday. Wednesday they weren't going to do it. By the close of business yesterday, he said they won't stand in the way. You know, did call the Republicans bastards, but outside of that, we will not get a government shutdown. Apparently, according to Schumer, this is what Trump wanted. Trump wanted a shutdown, him and Musk, so they're not going to give it to him. That was the rationale. I don't care what the rationale was. A government shutdown makes no sense. So, now, does the spending make any sense? No, but, hey, at least it's going to be open. We're open for business through the end of September. Well, it isn't quite official yet, but that looks like that's going to be the case. No budget, but at least a resolution, and then they'll hopefully try to get something done at the end of September for 2026. So we don't have the tax cuts, right? None of that stuff happened, like the tax cuts and all that stuff. That is, nothing's been done there. All as they've done is agreed to keep spending pretty much at the same levels they were spending at. Nothing about the debt ceiling. So we still don't know there. We know it's big, but we don't know exactly how much. But I think that is extremely good news, at least for certainty. You know, people will know, right? Hey, I can go to work. I'm not going to be fired, right, or laid off for a while or what have you. So I call that extremely good news. Other good news, Germany, it is official. So remember, I told you guys about this, I think it was last week, maybe it was early this week. I get them confused. Remember, Germany's bond yields exploded. They were going to spend all this money, and, you know, hey, we're just not going to count it per se. That got approved today. So they made a deal. The spending, it's on. So more competition for the bonds of the world. And like I said, it's a good news day. Lots of spending, lots of, we're going to try to grow our way out of it. In Japan, you know, Japan does things a little differently. But apparently all the workers in Japan are going to get a 5.5% pay increase. They wanted 6, but they settled for 5.5. And again, I don't know how that's going to make things cost less. I still haven't figured that part out yet of how all of this is going to make things cost yet. But we're going to see how all of this plays out. Donald Trump yesterday doubled down. I'm not bending at all when talking about tariffs, saying that I'm not going to bend at all. We've been ripped off for years. We're not going to be ripped off anymore. And I guess essentially letting everybody know, hey, come April 2nd, these things are going to take effect. He still wants Canada to be the 51st state. He made that perfectly clear yesterday. And then he also wasn't done. He wasn't done. I don't know if this means that they'll be the 52nd state or not, but Greenland. He's saying that once again, the annexation of Greenland. He says that thinks it's still going to happen. Now, Greenland had elections this week. I guess I don't know about the anti-Trump, but the we're going to be part of the U.S. coalition. They won. They were the winners. But the Trump backers, or maybe the people open to Trump, they were second, so it wasn't like a total defeat there. But the Prime Minister of Greenland did come out. Don't keep treating us with disrespect. Enough is enough. We don't want to be part of the United States. Donald Trump, though, saying, hey, I think it's going to happen. It's for international security. The president said, hey, we're going to be talking to people about it. So there you kind of have a quick reboot of some of the things that we were worried about today have gone, right? The Democrats are going to not shut down the government. I think that's the biggest piece. Germany, they got the green light to spend crazy, and Donald Trump's not backing down on these tariffs. And by the way, still wants Canada and Greenland. I'm still waiting for Mexico, right? What about Mexico? Can we take that? If we're just gonna take stuff, right, and say, hey, let's do it, right? Panama, Panama's a little far, but man, Mexico's right there. I don't know. I'll be crazy. Hey, here's the good news. It's Friday. We'll be back after the break. 510-592 Patriot Radio News Hour on this Friday. A quick look at the markets. Oh, it has been a brutal week for Wall Street. We know that, but good news here on the shutdown or lack of a shutdown. At least we think that Schumer has given the green light to get us through to September. The Dow is up 500 points today. The S&P's up 90. The Nasdaq's up 350. The 10-year note up, in the 430s here, 430 and change. Crude oil's higher, but still at 67. That's not terrible. Gold, depending on where you look, I'm going to just say that gold's down $4. But it just where you look. TV, it's up, but I've got 29.83. 29.83 right now. I'm sorry, 29.85. 29.85 on gold. Silver, 33.60 right now on silver. And again, we keep telling you about being more diversified. Understand what's at stake. As far as when we look at what's going on globally, we get it, right? The Trump administration's, they're making an attempt. Hey, we're going to try to rein in spending. The dose thing, it's great, right? Never, ever should we be upset that we want to eliminate wasteful spending, fraudulent spending. What we're finding out is it's really not a ton, which we kind of do. I mean, let's be honest. Did anybody honestly think that they were going to find $1 trillion? Remember, they started at $2 trillion. That was never going to happen. And that realization, I think, is starting to sink in, which is why the tariffs are now even more important. Got to have the money, right? And then we're going to talk about Social Security. Elon Musk made some comments, and then BlackRock made some comments. This is something that I think all of you are going to want to hear. It's probably, I hate to say it, maybe the way it is. I don't know. But when we look at Wall Street, and I know, listen, Donald Trump's going to get blamed, and rightfully, because that's what you do, right? If you think of it this way, You got a football team, and you had big expectations, and you come out of the gate, and it's not going your way. Right? You thought hey, we're Super Bowl contenders, and you made a bunch of moves in the off season, and you got the shiny new quarterback, and it hasn't started very well. Well, what do? Well, you start blaming the quarterback, or you blame the coach, one of the two, or both. That's kind of what we got going on right now. Wall Street was priced to perfection. What does that mean? It was way overvalued. So anything to disrupt that was going to cause these issues, these sell-offs. They're going to continue. They're not, listen, stocks are not on sale. Sorry, they're not. I know it's Good News Friday, but be more diversified here. Look at what gold and silver are doing. Right? Wall Street had its worst week in 2 years. Gold hit a new all-time high. You got big IRAs. Take some of that and get a gold and silver IRA set up. We can help you do that. Just call us 800-951-0592. So interesting developments when it comes to Social Security. And I think this is partly because, right, the whole Doge thing, like I said, it's great. We should do it. We should have Doge all the time. That's just where I don't want fraud. I don't want waste. It's our money. That's the one thing I don't understand. I find it interesting, the people that hate Doge. What do you hate exactly? That they're trying to stop fraud and abuse and figure out where our money's going? I never really understood that part of it. Obviously, I understand if you're somebody that gets fired because of Doge, you're probably not happy. I get that. But remember, they did that whole thing with Social Security, all those people, they're 100, 200, 300 years old. Of course, I said, listen, that's a great headline. It's not really happening. It isn't. But now, in an effort to try to fix the spending problem, you got to remember there's only so many places to go. You got Social Security, you got Medicare and Medicaid, you got defense, you got the interest on the debt, and that's most of the money. Right? There's not even $2 trillion left after that. Heck, there's not even $1.5 trillion left after that. But this is the money. So you got to cut somewhere. Well, you can't cut interest. It is what it is. You keep borrowing like this, you're going to have to pay for it. So you got the other three legs: Medicare, Medicaid, and Social Security, and defense. Well, for whatever reason, apparently we can't cut defense. As a matter of fact, in this bill, we're going to spend another $8 billion. Back on the table now, privatizing Social Security. Apparently, on Wednesday, BlackRock hosted a retirement summit. Their CEO, Larry Fink, says he supports more individual ownership in Social Security. I'm sure he does, because I'm sure miraculously it'll be BlackRock that gets to manage it. But he said he would not necessarily use the term privatizing. And he says, here's why he doesn't want to use it. This is all you need to know. He doesn't want to use the word privatizing because that's a toxic connotation. In other words, if we say the word, the people will be like, whoa, hey, that's not cool. We're not privatizing. So let's just call it something else. It's kind of like Germany's debt deal. We're going to spend it. We're just going to pretend we did it. Obviously, this is what they want. If you're going to privatize Social Security, I got an idea. Call it crazy. Then stop taxing us for it. And then let us do it. Let me do my own. Let everybody out there do their own. They're not doing that. The problem we have now, it doesn't grow with the economy, Fink said. It doesn't grow with the economy. Well, you guys said GDP was about 3%. Matter of fact, if you look at the economy, the economic growth over the last 15 years, it's probably about 2%. I mean, right now, all the Treasury bonds, I mean, they're yielding like 4. I mean, if you know, of course, if we had any money. Any leftover, they say that Social Security, now listen to this, Social Security is a pay-as-you-go system. See, they want to rewrite history on us again. Social Security used to be pay-as-you-go. That was true. That was how it was set up. And let's just say that Social Security ran a shortfall. The following year, they would bump up the payroll tax to cover the shortfall. And every few years, they'd bump it up and bump it up. You know, it started at 1%. Of course, where are we now? 6.2, plus the employer pays 6.2, and if you're self-employed, you pay it all, 12.4%. That changed with Alan Greenspan and Ronald Reagan, right? They had the big Social Security slush fund that was going to keep Social Security solvent. We wouldn't have to worry about the baby boomers. Look at where they are now. The debate is on what day does Social Security run out of money. I got a news flash. It already did. It already did. They just play a little pretend game because they already spent the slush fund, but neither here nor there. Right now, today, Social Security pays out more than it takes in, period. And they make this difference, and, you know, they make the difference. It's a journal adjustment from the quote-unquote slush fund, and that slush fund is going to run out. And then when it runs out, then they're like, oh, my gosh, it'll only pay 77% of the benefits. Well, what Larry Fink is trying to do is create a plan that will grow with our economy, and they're going to feel more attached to the economy. See, if you just give the money to BlackRock, somehow they're going to feel better. Yep, we'll feel better. We will feel more attached to the economy. Really? We're going to feel more attached? What does that even mean, more attached? There's a lot of people out there in the private sector that say, you give me $2.7 trillion and let me invest that, and I can turn you a lot better, greater dividend than a normal Treasury bill can. Okay. But you don't have $2.7 trillion. It's pretend. Right? They keep trying to say they have it. They don't. But neither here nor there. Let's just say they did. What happens, I guess, what happens if we have a recession? I mean, you know, we just have a bad year. Right? What's going to happen? I don't know. I'm looking at this, and I'm sitting there thinking to myself, and then probably before Trump gets out of office, we're going to need to make a major change to Social Security and Medicare where the cost, we're going to have to do so. I wish we didn't, right? I wish they hadn't have spent all the money, and I wish that they hadn't have gone $40 trillion into debt, but they did. handing it to BlackRock. I think that tells you really where we're at here. Just the thought that they're talking about this. They're desperate to try to have some kind of a miracle cure. Well, if we just invest it, we can somehow, I guess, grow our way out of it, right? Maybe we can do better. Of course, they never talk about what happens if you did worse, right? That's kind of a problem. And then, you start thinking about the plan here. Hey, the tariffs. And, it's going to be painful. Government's cutting back. That's going to be painful. But we're hoping at the end of it, it'll be better. But what if it isn't? And I think this is kind of the situation that all of us need to understand and face. The good news, all right, it's Good News Friday. The Trump administration is at least trying something new. Is it going to work? Nobody knows. Patriot Radio News Hour. We'll be back after the break. We're back. 800-951-0592 on this Friday. And, we've got so many things happening, and it's hard to keep track of everything that is going on. The good news, it does appear that we're going to avoid the government shutdown that was threatened by the Democrats, so that is definitely a positive. But as we talked about, right, we've got a problem. We've got a problem with the amount of debt. We've got a problem with who's going to be buying it all. And then, of course, we've had this unprecedented flow of gold and silver from London, the London markets, to the New York markets, and shortages and long lines. We have an update now. They're saying that a staggering 2,000 tons plus. Now, that would be a fourth of all the gold we say we hold. In December alone, they said listen to this, every single flight was booked across the Atlantic with all the shipping logistics providers. You couldn't even get metal on a flight because they are so booked up. And it will be 3 months or longer just to get a flight to book to put gold and or silver on it. Obviously, what they're saying is in London, they're 400-ounce bars. In New York, they're 100-ounce bars. Obviously, I think they can make the exceptions, right, and say, okay, well, we're going to do this or that. But here's what they're looking at. They're saying that the traders are trying to build up as much physical inventory as possible. There was supposed to be an announcement in February, but now they're saying it may be March or April. No one really knows, and I think they were talking about tariffs. The likelihood is they're hoping that gold won't be tariffed. However, nobody is saying that when we look at Canada and Mexico. So far, we get a ton of our silver from Canada and Mexico. nothing is happening. I think it's much deeper than this. When we look at the amount that is that's pouring in, this has a lot more to do than tariffs. And we look at yesterday as an example. We had some pretty good auctions earlier this week. Of course, we saw the interest rates go back up, right? We were down in the 415 range. Now we're in the 430 range. But yesterday we had one of the worst auctions on a 30-year note. The bid to cover below average. The internals were very, very ugly. The indirects only took down 60%. That's well below the average. The directs had 22%. The dealers were left with 17%. Who are the dealers? These are the banks, right? Having to absorb, when you're talking about having them absorb 15 to 20% of all of these U.S. debt auctions, it starts to become a very big problem. People are saying that a lot of these banks that were short the metals, and we know who they are. The thing about it is that they got caught off guard by how many wanted the physical product. So think about this. Let me give you a great example. Let's go back to, let's say the middle of last year. Let's say the beginning of last year. How about that? Right? When gold was barely $2,000. And you went long gold, and you did it in let's just say, a February 2024 contract. Because the farther away you go, the less you've got to pay. Well, fast forward. Now gold's almost $3,000. And you have the option. Hey, just pay me, right? Pay me the difference and look how much money I made. Or, you know what? Just deliver it. And, of course, the banks are being forced to deliver at the $2,000 price. So look at the losses that they're heading into. And a lot of people, me included, are speculating, hey, they're going to make sure that doesn't happen again. And they're buying all this gold and bringing all this gold over here because I think they know. Hey, wait till next year. The price is going to be $4,000. Jeff Gundlach, matter of fact, on allamericangold.com today, he does these things every month, and he's super good. It's really boring. I'll just tell you, it's like 40 minutes, but it's boring, but I love it. It's exciting for me. He kind of made fun. All these people talking about, we're predicting $3,000 gold. And he's like, gold's already $3,000. It was $2,900. He's like, come on, what is that? He's like, gold's going to be $4,000. And he goes, I'm not saying, he goes, I don't know if it's going to be this year, but yeah, by next year, gold's going to be $4,000. So again, these people are like, well, gosh, I bought this contract. Right? And let's just say, each contract in New York's 100 ounces, okay? So let's just say they bought 100 contracts. Well, that's each contract's controlling 100 ounces. You get the idea. That's 10,000 ounces of gold. And you're like, wait, I bought it at $1,000 cheaper. You know what? Send it all to me. I'll just keep it. That's what's happening. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe, and Jason's here. He made it in. Jason's got a lot going on. The markets have been absolutely crazy, and just dealing with everybody. We got all these people now, new customers, people that, you know what, we're curious about gold, and at the financial crisis, didn't pull the trigger, kind of been watching it, and now all of a sudden, okay, Wall Street's struggling, Bitcoin's struggling. You know what? Here comes gold again, right? Here comes gold again, and the guys that I keep telling you to watch, they're the ones that are telling you where this thing is going to go. Very interesting news about why, yes, some of it is tariff, sure. But it appears the amount of people willing to take physical delivery, that has become a big change. And the sad part is, it only needs to be a little bit. Right? Because normally 99% of all the paper contracts, they have no intentions of taking delivery. Right? They're just placing a bet. Hey, I think gold's going to go up. I think gold's going to go down. I think silver's going to go up. I think silver's going to go down. They're just placing bets and hope they win. But now it is starting to cause a huge, huge problem in these markets. Right now, like I said, gold $29.85. It's been as high as $3,005. $20 gold pieces, and it just continues here. $3,170. If you want to do 50,000 or more calls, we do volume discounts. If you want to get set up with a precious metals IRA, you got an IRA that you've worked your whole life for. Take a part of that, put it into gold and silver. Call us. We can help you do that. But Jason, China, they created their own ETF. And it just set a new all-time record as far as the amount of gold flowing into the ETF. It was just amazing how much gold flew in to this. And this is a relatively new ETF, and it got created well after GLD, but the holdings rose another 21 metric tons. It now holds 131 metric tons. It is a new all-time record high, and as we're looking at gold demand, it seems like it's coming from everywhere. ETF demand everywhere. Central bank demand everywhere. Physical demand from, I guess, we'll call them third-party commodity houses everywhere. And now, Jason, as you know, in the last couple of weeks, even now the retail demand here, at least in North America, picking up again.
Yeah, we're actually, it seems like there's a little bit more activity right here in Colorado. I know Joe does the Arizona. We've been warning you guys this last year and a half. It's been slower, not slower on the selling. Lots of people selling. Lots of people having trouble with these higher prices. But on people purchasing, Joseph mentioned earlier in the show, lots of people are just looking around, waiting, and so these lower premiums. The gold price is higher, but the premiums above that are so great, and that's going to be erased. If these people start buying again and soaking up all this available inventory that's at some of the biggest distributors across the country and some of the biggest retailers, and then suddenly the premiums come roaring back. Now we're at hitting 3,000 gold. You get a big buying frenzy going on, and you could have $3,500 an ounce gold or $3,700 an ounce gold. I mean, Joe, I remember we had 22-ounce silver a couple of years ago, and we were selling it for $40. we were on the air trying to buy it for $10 over spot. That's how quickly the premiums can take over the price point. So if you look at essentially 20 silver, buying it for 40, not quite a double. I mean, if gold had that kind of action going on, we would be selling gold pieces for $4,000 right now on the premiums. It's cheap. People need to know that $2,900, $33,000 gold is right now is cheap. It's actually cheap. You know, the price of a cow has gone up to $3,000. Gold is right there with it. So how much does it cost to get the cow in the truck and bring it over to your house? Right. That's what the premium on gold is. And suddenly there's a lot of competition to drive the cattle around, right, Joe? We're gonna see those premiums come up, and let's just say gold goes to 3,200, 3,300, and suddenly the buying starts racing, right? Let's say whatever tariffs goes on, let's say the markets, which bounce back a little bit today, they just continue to go on a downward trend in the next couple of weeks. People started coming into gold and buying up all available supply on the retail side, and now you're paying $3,500, $3,600, $3,700, $3,300 gold, Joe. 4,000 gold is really not that outrageous, and $3,600 gold or $3,700 gold is going to be good. I think that's going to be kind of normal, right?
Yeah, and when we look at what, and again, like I said, it's not just here. I know the headlines. Hey, we're trying to slow the spending down. We're trying to cut the spending. But then you look at what was the reality. Well, let's just keep spending at the same levels we've been spending at. And then next year, let's figure out a way where we can spend more. That's why you're seeing gold doing what it's doing. And like I said, you know, I'm still going to sit here and say, hey, gold's going to be $3,300 this year. Of course, I said that last year that it was going to be this year, and that's what it's going to be. And I'm going to be like, 4,000's on the clock. 800-951-0592. Joe and Jason wrapping up a huge week in the metals markets. Gold breaking through again to the upside. Silver still hanging right. We want above $33. Did it Wednesday, did it Thursday. He's going to do it today. Right now, $20 gold pieces, $31.70. $31.70. If you do 50,000 or more, we'll take them down to $31.50. And you know, it's amazing. You know, Jason, that's like $16, $20 gold pieces. I mean, that's it. I mean, this is the thing that's happening here right now. You are going to see much higher prices because the amount of debt that needs to be sold. You know, Ray Dalio just said it the best. Nobody wants that much. You know, what happens when you make too much of something? You throw it out, right? It gets wasted. Well, you can't throw out the debt, right? I wish we could, Al, and just throw it in the dumpster. It doesn't work that way. I hope people are paying attention.
It does work that way. It does work that way. It's a bankruptcy, and then everybody that did business with you no longer does business with you. Yeah, throw out the debt. Go ahead. See how the rest of the world decides to treat you. America's really good at if you don't do business with them, they destroy you. What happens to business in Venezuela? Well, Venezuela doesn't want to do business. They kicked our oil companies out, and they kicked our banking system out. And look what happened to them. Essentially, they bankrupted their way out of the world system, and they're being punished by the system in place. So, yeah, you can get rid of the debt. There's too much debt, but no one will do business with you, and that's not going to happen, Joe. The debt's not going away. It's going to get bigger.
You know, here's I know it was Good News Friday, but here's the thing that really is going to happen. You know, Jason was talking, Venezuela is a great example. Hey, they got punished. People need to know we're the ones that are going to get punished.
Yep.
with U.S.'s debt. That's the thing. We are now Venezuela. It's hard to look at it, but that's what's happening. Look at the price of everything. That's how we're being punished for this. And, Jason, that's going to continue.
Things are going to get really expensive. And I'd like to see where these wages are, how much failure will the wages be keeping up with this inflation? Stagflation. Here's the thing. Why do I get this really bad feeling as we keep waiting for a market crash and keep waiting for these things to happen on a big scale? Why do I get the feeling this can go on for years, and this is how we get, mistakenly forget that stagflation can go on for years? You don't have big market crashes. You have sideways markets. I've said this many times. If the price of something doubles, if say the price of all goods and services double, and your house goes from $400,000 to $404,000, you look at your house like, well, it didn't go down this year. It went up 1%. My house went up $4,000 this year. At least it didn't go down. But if the price of goods and services go up 50%, your house crashed in value. Inflation makes it very difficult to understand the value of things. And we could have sideways markets, and the markets could be crashing if the price of a loaf of bread goes to $15.
800-951-0592. Jason and I, we're coming right back with the final half-empty cup for the